gives you the visibility of your borrower's financial know-how. GSTR Analyzer analyzes the raw data available on GSTN server and gives insights on the various sale and purchase transactions to the lender. Digital lending software platform originates loans and is powered by SCORME APIs for determining loan eligibility using analysis across financial statements. Credit monitoring. Highly flexible and scalable software, enabling the lender to analyze large volumes of data as per requirements. SCORME, a leading fintech company in India. Get in touch to know more.
Good evening and hello and a very warm welcome to our esteemed panelists and our audience today for this session on navigating recent developments in digital lending in India. My name is Praveen Khanna, and on behalf of SCORME and Resurgent India, it is my privilege to be your host today. We are joined by an esteemed panelists and members from the digital banking and financial services industry, and it will be a privilege to both learn from their deep domain experience and their journeys from physical to digital lending, and indeed their experiences in working with the fintech industry in India. Now, before I invite the panelists for their views, just a few words about the enormous growth of digital lending in India. Now, digital banking and fintech is increasingly becoming omnipresent in India today, right from wealth management to payments and of course to lending. The expected market sizes is expected to grow from 2 lakh crores to 8 lakh crores by 2026. India has the third largest number of fintechs globally after China and US, and the highest adoption rate at 87% as compared to a global adoption rate of 64%. From the first phase of digitization in financial services via the opening of Jan Dhan accounts to the second phase via UPI, I think we are now in the third phase, and this is being led by digitization in lending. We have the fast emergence of loan service providers, the neobanks, and the emergence of the account aggregators, and of course the setting up of the digital banking units as proposed by the government. Banks are also making substantial headway in digitization. Kotak through 811, SBI through YONO, and ICICI through the new InstaBiz app. Just focus on MSME lending. Recently, the finance minister has made several important announcements in a recent budget speech. The plans to set up a digital public infrastructure for agriculture as an open source, open standard and interoperable public good, agriculture accelerator funds to encourage agri startups and lending. The government has also proposed setting up of 3 centers of excellence on artificial intelligence. The idea, of course, again, to formulate the national data governance policy, which will enable anonymized access of data. FM Sitaraman has also proposed the launch of phase 3 of e-courts. So all of these are very, very positive steps. The recent proposal on the CGT MSE scheme from 1st April, infusing 9,000 crores, should again enable more encouragement to MSME entrepreneurs. Of course, there are still challenges that remain. We've just recently seen this week that 94 digital lending apps have been banned by MeitY. The gap in credit access continues to be huge from an MSME standpoint. Out of the net 70 lakh crores exposure to MSMEs, only 16 lakh crores is via formal credit. That remains a big, big challenge. Our credit to GDP ratio is almost only at 55% versus 160% for China and 135% for emerging markets. So we are still trailing emerging markets. There are several themes that we can cover today. The future of credit access via digital lending, the emergence of the account aggregator model, the role of AI, ML, and analytics. And it works both ways in terms of access to credit, and also there are concerns around frauds and exclusion due to absence of data. So several important themes that we'd like to cover today. And it will be my privilege to invite our first speaker today, Mr. Dhruv Suri. Mr. Dhruv Suri has more than 18 years of experience in the BFSI sector. He's an expert on supply chain financing, MSME loans, and fintech. He's an alumnus of the prestigious FMS and Delhi University and has extensive experience on product development. Mr. Dhruv Suri, over to you. Dhruv?
For giving me
Mr. Dhruv Suri?
So I believe there has been some network problem.
No problem. Absolutely, loud and clear, sir. Please go ahead, sir.
Thank you very much. Thanks, Praveen, for giving me an opportunity to be a part of this August panelist and to discuss about how digital lending has shaped up and how it is going to be, and how things are going to be from a perspective of what is a theme for the future as such. Having said that, if we go a couple of years back, there has been a time when we were used to process loans and used to take a couple of days. In a thin file, it used to take a couple of hours and all. The journey from there has now become instant. Key reason for that is there are three key themes on which work has been going on. One, where fintechs have played a very significant role to reach to the last mile. Second has been an enablement where fintechs, regulator, government, and financial institutions has been creating an environment where digital processing can happen. And I'll talk about it as we move forward and all. The third one is removing friction in the credit value chain process. When I say that, the era of physical documentation to moving to complete digital documentation. So that's been one enablement which has been there. And the positive thing around that is that though COVID has given other challenges, but it has accelerated by, this is my personal view, by minimum 4 to 5 years for a country like India for adoption of digital lending as a process. Just to name 2-3 specific things, that video KYC has become now a norm, which was not something which was very, very, I would say, adaptive at that level and all. Agreements, loan agreements are now getting signed digitally. And I'm talking about at a corporate level also, where beyond consumer loans, nobody was looking into that. So that's been the thing. Having said that, the key, and I think we have to understand at an overall level is where we as a country are headed and how this digital lending can help us and all. Our target is to become a $5 trillion economy. For that, the key focus is basically to reach that. The MSME contribution has to go from 30 to 40% of the GDP. For that, and there has been a wide gap. There are multiple reports which has been there that the complete credit gap for enablement for them to grow businesses around $380 billion. This number is growing as such. In MSME, in last couple of years, if we see specifically the credit value chain enablement, how it has happened is that with India Stack, your KYCs have started becoming digital. Your identification has started becoming digital. With instant data pull from banking, with government initiative on GST data, alternate data analytics have started working on it, which has basically started making decisions much faster. Keeping that in consideration, but as we move forward, the key is that the current, I would say, in last 6 to 7 years, the work which has happened has been primarily on the top 10% of this pyramid. The bottom pyramid, which contributes over 95% and will be the key contributor from a perspective of growing our economy. Work has started, or a lot has to be done, which is I'm talking about a micro SME. Digital lending, alternate data has bought a few good things for us. BNPL has started. A lot of players are now, again, I would say, kudos to the fintech fraternity that, these alternative data models have started working in. Deep tier is another one where revolving credit has been making rounds. You would see new models coming in for them, which is like revenue based financing. I think 2023-24 is one of the years where you'll see a lot of financial institutions also focusing towards that specifically. So that's, and these pyramid, and in this also there are themes of sectors where has to be focused for creating a complete digital ecosystem. And the more frictionless process is going to be there. Things are going to be far better. And I think a lot of initiatives by government and regulator has been commendable around that. From starting from, I would say, the recent one is account aggregator, where all 4 regulators coming together and creating an environment where on a click of a button, the information can be taken. No use of digital, I would say, even a soft copy of a data which is required. But key for that has been, would be for all of us, is that how we create awareness around that. Because as humans, at times we are not comfortable sharing information directly when it comes to bank. I'm sure my colleagues will also agree to that. With the digital banking parsing process coming in, there has still been, particularly in non-consumer segment, there is a very limited, I would say, single-digit penetration of access to net banking for data fetching and all that. So that's something which is a very, very critical step which has been taken. Second is basically the open network which has been created on the digital commerce by Government of India, ONDC as we call it. There is a lot of work which has been happening, though it's still at a very nascent stage, but it's creating an environment. And if you see, our Indian e-commerce market is approximately today at $38 billion. Which is expected to go to over $300 billion in the next decade or so. For that, again, to create an enablement for them, for the bottom of the pyramid, MSMEs, hyper-local delivery process, ONDC is going to play a very, very critical role from increasing business. It's a very interesting app. And if you guys have not tried, try one of them. I have seen it. It's just like a Trivago of or a Vigo of I would say travel industry, that everything is available. You are not restricted to a closed loop marketplace, which is the current norm as of now. On top of it, the initiative of Open Credit Enabled Network, which has been another element where a lot of work has happened. initiatives have been taken. GeM Sahay as a platform is a classic example where the processing has gone digital with the help of GST and banking. And I'm sure you guys will be delighted to hear that a transaction of as small as 160 rupees as for a loan has been done on that. Never heard of. So that's the power of digital processing, where your reach goes higher, scale is very high, your processing cost can go very, very low. Specifically, but as Praveen, you also mentioned, with all these, there are certain challenges and issues also comes in where our regulator keeps on intervening time and again. So the key aspect because of which digital lending guidelines also came recently is the data privacy. That's going to be a very key to look into because if you see account aggregator as a process is only available to regulated entities, not to the LSPs, loan service providers, fintechs like ours and all. For making more inclusiveness around that, definitely we would look forward as things go mature that this can go a little beyond the way as far as bureau has been given to, access has been given to the LSPs as such. So things are moving on that specific area and all that, but yes, responsible lending, particularly if I talk about the current theme and how things are going forward and all that, is more from a perspective of that, like how you build your strong risk models, risk analytical models based on journey, the segment and sectors which is there. That's going to be a key. Only working on models like where there is a loss guarantee models may or may not work. Like I have a different view around that piece specifically, but it is important that the journey goes beyond risk sharing model and a focus has to be there. This is where AI and ML will play a bigger role. As we go forward, their role is going to be very, very high. Co-lending as a process, it's also a part of a digital processing. If you see it today, is the way in last 3 years it has grown and it has gone to a as it is maturing and adaptability at I would say large PSU banks also. That's an area to watch for. But currently, again, it's just a scratch which has happened specifically around that. But that's an area where a lot of focus has to be done as we go forward as such. New age products like BNPL, revolving credit, creating an ecosystem, the way supply chain in last 4 years, you would have seen that a lot of fintechs are focusing towards that because globally also, not only in India, globally also, it's trillions of dollars which get stuck because of friction in the supply chain payment mechanism and all that. And a lot of work has been happening around that to enable that whole ecosystem. So all in all, to sum it up, what I would say specifically is that yes, we are one of the top, or I would say the third largest fintech player in the world. It's a matter of time, that we can reach to be the biggest one, because a lot of our colleagues, a lot of our friends from the industry today are taking India's learning globally. A few of them have started, entering into South Asia and all, and that just, I would say, just a baby step as of now, but it's like miles to go before we sleep. Thank you very much.
Perfect. Thank you. Thank you so much, Dhruv, for sharing your views. I think a few themes that are captured from your perspective, fintechs helping in the last mile connectivity, the positive role of the regulator and the government, removing friction through VKYC, e-sign, the use of GST in lending, and of course, open and co-lending models that are coming into picture. And I think a couple of big challenges that are captured, the reach of credit access to the bottom 90%, and of course, the FLDG model that you alluded to. I think those are some challenges and the challenges around data privacy. So we will definitely come back to these areas as we go along. But it's my privilege now to welcome Mr. Vineet Jain, He's GM Business Finance and Head IR at Schneider Electric Infrastructure Limited. He holds a CA and a Master's in Business Finance by qualification. He has more than 19 years of diverse experience in India and US-based MNCs handling finance. Over to you, Mr. Vineet.
Thanks, Praveen, and good evening. So I will just compliment what Mr. Dhruv has said, but I'm just covering from as a common perspective rather than a banking perspective. So first thing that question come in our mind, that's whether the digital lending will survive in India or not. So if you see, that's we already started this journey, because if you go any of the developed countries, you will find the still the banking system are taking 2 to 3 days in credit, whereas we are already in a click of few seconds we are transferring the money. So this digital transformation already it started, and in fact it's not about the Gen X or Gen Y or Gen Z. In fact, nowadays all the generation is participating in an equal format. That showcase that the what kind of value or what kind of the adaptability of technology as India we are carrying, and how the value chain we are creating for the globe. So that's the one part of it. Secondly, the major misunderstanding for a common man is that the digital lending is a competitor to the banking system. That's the reality is not. In fact, it's partnering between the banking system and the digital lending, because our ecosystem of the banking is so not so flexible to reach the last milestone. For that purpose, digital lending is the key for them to reach to the individual small consumer, to reach out to them and to fill their requirements. Take an example, just like Mr. Dhruv was mentioning, a loan of 160 rupees. So we can't think of a bank or any of the traditional bank and go and fund 160 rupees. But whereas the lower 90% of the population in India has a very limited requirement, they don't need a very huge amount of loan. So that's the another way that we can see it's a partnering between them, and actually the existing banking system is empowering the digital lending for the all the fintechs, and the neo banking system is coming up. And third, more important point I will recommend is that's the account and aggregator. It is the key roles that going to come in the future. If you recall any of the industry, the telecom industry, till 2003 we have that's the isolated towers for the all the industry, and we were not able to get that kind of the facilities that we are having. But after 2003 we have the aggregator for all the towers. But suddenly the revolution what happened in the industries was so dramatic that we are all seeing that now the data availability what are using, it's a few bucks. Earlier that's the 250 MB cost was 300 400. So that's the difference that the aggregator can create. So similar thing, the aggregator will definitely going to key role in the process of the digital lending and reaching the milestone, because it will help regulator, it will help to the institutions like banks or NBFC, and at the same time it help to the digital lenders or neo banking system to come on a similar platform to use the ecosystem for the cross banking purpose. So banking system will not focus on the using only on the documentation part or on the verification of the individual part. They will focus on the more on their product and the customization of the solution for the customer, the better delightment of the customer, rather than doing the paperwork, because the aggregator will take care of this paperwork or the majority of the processing work that the bankings are doing. With it will going to take care of that aggregator. And as Mr. Praveen Dhruv has said, that yes, it's the initial stage, so inclusion of the this account aggregator is required. So I think as a government manager, because they are coming as a secure manner, because when we're talking about the data privacy, it's a major concern for every individual. So it's a evolving, it will take some time to come out that part. And last thing I would like to highlight here is that now the banking digital lending system is coming up from a from the system to a consumer requirement. So earlier we have something like the standardized 4 or 5 products on which that the bank are going to lend. But now I think that's the area where the fintech or the digital lending need to focus on that, rather than going for all the standardized products that the bankers are offering. They should come out the customized products specific to the MSME segment, because every MSME segment has a very different requirement for individual, even in the same industry or the same platform. But if until and unless they got the customized requirement, they will not get the trust and the confidence in the system. That's okay. The digital lending is giving you some additional value addition or something new, which help us to grow our business. And that's something the government focus is also there. And that's the e-commerce or the e-learning or in the MSME segment that the government is focusing, so that we can make this industry also the customized for the customers rather than just for the centralized for the few aggregator or the few players who will make the products as per their own choice. So with
Thank
that,
you.
I will hand over back to the Mr. Paveen.
Thank you. Thank you, Mr. Vineet. And very, very important points raised by you. I think one very positive element that we are far ahead of the world, which is something that Dhruv also mentioned. The fact that digital now cuts across ages and segments. So it's not just about Gen Y or Gen Z. There are, of course, product customizations that we can bring in through fintechs, which are specific to the MSME segment. And as both you and Dhruv had mentioned, the new emerging account aggregator model. And I think that's a perfect note for me to introduce Krishna. He's the founder and CEO of One Money, India's first account aggregator. If there's one phrase that describes KP's passion, it would be public policy. His definition, a policy that empowers and empathizes with public. Over the last few years, KP has invested his energies into blending his understanding of technology and business with his personal mission for empowering ordinary citizens and reap benefits of democracy by helping democratize opportunities and resources. Prior to launching a platform called Phone to Vote, KP has over 36 years of experience in lending, investment banking, and technology sectors, both in India and the US. KP, it's over to you.
Thank you very much for that introduction. Maybe we could have avoided the 36 years experience, and people will think I'm too old. Why am I here still talking on webinars? Just kidding. Thank you for having me all here. It's wonderful to be amongst such illustrious panelists who are doing very important things. And without hiding my glee, let me also say each of you is a potential customer. So I'm even more happy that I'm here with you on the panel. But absolutely, congratulations to ScoreMe for bringing up this important topic and spreading the word. Digital lending is absolutely the way, as the first speaker Dhruv himself said. While there are difficulties, why the pandemic came and made life difficult and actually sad for many people, but the corollary benefit has been a big fillip to digital lending. So let me straight away jump to what account aggregator is. I think the rest of it is all known to all of us. No point in convincing each other on a concept we are already championing in our own way. Still, in spite of account aggregator being fairly, I would say it is coming of age slowly, but it's still not at the level of UPI or some other system. Therefore, I'll take a little time to explain account aggregator system. There are 55 participants, it appears. Obviously, my panelists know that well. Account aggregator system is a name given by RBI to what is called open banking worldwide. Open banking is nothing but at the heart of open banking is the belief that every data element created by a person when interacting in the financial ecosystem with either a product provider or a service provider or anybody, when you create the data belongs to the creator of the data, the person who is seeking a product or a service. It doesn't belong to the institution who is capturing the data, of course, spending money on servers and everything else to capture the data and evaluate the person for the eligibility of the product. So this belief is very fundamental, and I want to spend a minute on that, even at the cost of sounding a little inane and very let's say basic. It's very important. For a long time, banks thought they had the money, they owned the money, right? Almost a century ago, they said it's our money. It took a long time for them to come from there to say that this is actually the depositor's money, it is the shareholders' money. We are only managers of the money, right? It took a long time, but of course now it's an old belief. For a long time, people started believing that whatever data they have, they own the data. We don't own the data. Each of us, let's say Praveen's mobile number is with me. For some reason, he gave it to me to be in touch. I don't own the mobile number information. He has given it to me with the implicit consent that I will call him with business related questions, anything that I want to do at a decent hour and do that kind of thing, right? It doesn't mean that I can give away Praveen Khanna's mobile number to lots of people and say, "Inko phone karo, ye bechne se shayad wo kharid lenge." That would be breach of data. This is what has happened in financial services for decades and decades and decades, where they thought customer is mine. I own the customer. Ownership of customer is another, unfortunate, belief that has lived. So we started believing that this is actually a good thing to believe. It is not true at all. We don't own the customers, just like we don't own our children. You give birth to them and you are responsible for your children, but you don't own them. I think the concept is not very different on data. Therefore, we were the first account aggregator in India. We are actually the first account aggregator licensed by RBI. We were one of the pioneers. As I keep saying, pioneering is romantic, but it is very, very expensive and fairly hard work. So we took a long time to convince the banks to become FIPs and say that share the data. The initial reaction has been, why should we share the data? We took a lot of effort to find the customer. It's expensive. Why should we? We don't want to give it, right? It took a long time. They said that this is the regulation, that the data actually doesn't belong to you. It belongs to the customer. If you don't give it digitally by consent, then the customer will walk into your branch. Anyway, he's doing that today. They ask for a printout. It is more expensive for you to share the data. You can't turn away a customer who comes into your branch or to your insurance office or to your mutual fund office. Give me my statement. You can't say, "Abhi time nahi hai, baad mein ho." Or of course, they sometimes may charge. I think there are occasions when they charge a stationary charge. We said you have to share the data. That is legitimate and the right thing to do. Forget about the law. Is it mandatory? Why should I do? So we went through all that. Today we have reached. I'm happy to report to all of you on the panel as well as all the people participating that we have reached a stage. We have today in the ecosystem processed already about 45 to 50 lakh consents in the last 7, 8, 9 months, 10 months. We have gone in production. It's actually production data, real accounts, real people being shared with real lenders, and real loans have been granted. I don't have a number of loans granted, but it is in tens of thousands, right? 45 lakh consents have been given. And today the ecosystem is at a stage where substantially lending is a big use case. Wealth management and advisory is also, the second large use case. But lending is the biggest. And all of us know, we live in this country, that we are a developing economy. More than developing economy, there's a huge section of the population, like another previous speaker has mentioned, Vineet Jainji, that, there are a large number of people who still need money, right? That is the biggest need in the society. They need money they need 1,000 rupees to double their vegetable sales for that day. They need 5,000 rupees to some little thing they want to do in their shop, that kind of thing. And like you rightly said, MSMEs will form the big part of the economy. They need to, if you want to be there at 5 trillion economy that you referred to, Dhruvji. So therefore, it is for these people this open banking has been designed. It has not been designed for people like us on this call, probably not for people who are participating. It is designed for those underserved and unserved. But as any other system, you can't discriminate based on somebody's caste, creed, to chhod dijiye, not even on wealth. Even if somebody is rich, he or she is entitled to use AA. The only thing I would say is, for people like us, it's a convenience, AA. For people who are underserved, it is a necessity. That's a big difference. And therefore, actually, our company has done, this app in vernacular and in different languages, and it has to reach. So that's the overall summary of AA. For those of you who are not familiar, So we are, let me also say that in our country, what we have done in this terms of this regulation, let us all proudly acknowledge that is absolutely the best regulation in the world. And I'm not exaggerating. This is not about jingoism at all. It's not about Bharat Mahan hai nahi, वो हम जानते हैं, लेकिन ये रेगुलेशन इसीलिए सबसे अच्छा है. This is the only regulation that combines all financial data under one umbrella. There's no other regulation. Even the UK, which has gone first with open banking, they were the first to make it is mandatory to about 9 banks in way back in October. I think in October 30th was a deadline for 9 banks to go in 2021. Even there, the most of the focus is on the payments data. Whereas in our case, RBI, IRDA, PFRDA, SEBI have come together. So your investment, long-term, retirement funds, banking data, insurance data is all under one umbrella, and you can share it by pushing a couple of buttons, and you share it with someone known, someone who can be tracked, someone who is responsible, someone who if by mistake misuses or something happens, you have a mechanism for grievance redressal. It is not unfettered use of data. जैसे कि पहले मैंने बोला, it is not like I have the data now, I will do everything. I know Praveen's mobile number, मैं अपने बगल में LIC एजेंट को दे देता हूँ, अच्छा प्रवीण को फोन करो, मिल जाएगा आपको एक पॉलिसी होल्डर. ये नहीं कर सकते. So therefore, even if State Bank of India takes my data for a car loan, they cannot share that the car loan head cannot give it to the consumer loan head saying that ये car loan हमने दे दिया इनको, अभी he still has surplus, he has a good income, you go ahead and sell him some refrigerator which is on a good deal. That is not permitted under this. Therefore, account aggregation really empowers in 2-3 ways. One is the underserved, unserved. They can sit in their little house, in their little shop, or in their field, or in their factory, and push a few buttons to apply for a loan. Point number 1. That is empowerment. Point number 2, you do it when you want it. ऐसे नहीं कि कोई दरवाजे पे आके खटखटा दिया, ये ले लीजिए, ये लोन ले लीजिए, hustling you into a policy or a whole. That is not permitted at all. You ask for it, you need it, you decide it. That is the other thing. Third, there is no unfettered data spreading all over the place, or people selling you, जैसे कि of course DND has been a failure in our country. So hopefully this concept will fix that failure indirectly, because once we are successful in the financial ecosystem, in fact, we have spoken to TRAI. We'll keep that aside for a moment. So this is the whole picture, sir. I don't know, Praveen, since you didn't ask any question, I thought I'll take the liberty of explaining AA. But I was not sure if what was the design of our webinar, whether this is an appropriate thing. Maybe I should have asked you at the beginning, but I thought that will only waste time. So, but here I hand over to you. I'm open to questions, or if I went on off track, if some other topic I had to cover, please let me know. Thank you very much for the opportunity.
No, thank you so much, KP. And those are absolutely the most important elements that you've shared with us today. I think some themes that I captured from my perspective, the equivalence of AA to open banking worldwide, the elements of data privacy and ownership, the fact that the data belongs to the creator. Again, banks don't own the customers, just like we don't own our children. And I totally echo that as a father of a teenage daughter, because I know she has totally her own views, and I cannot influence that, try as I might. And lastly, I think several other important themes on data localization and reaching the underserved population, So very, very important themes. And thank you so much for sharing those views. And I'd like to take this opportunity now to introduce Mr. Sharad Bhise. He's the Chief Risk Officer at SME Intellect. Mr. Bhise brings with him 25 years of SME experience, and he has a 360-degree view in risk management, credit appraisal and monitoring, relationship management, portfolio management, collections and recovery. Mr. Bhise, over to you, sir.
Yeah. Good evening, all. Thank you, Mr. Praveen. Thank you, ScoreMe team, for inviting me to be panelist for this wonderful session. I will say basically that we just started a year back, and we are like benefiting from all this development in the new age digital banking and digital lending. We are actually benefited a lot from this all the development happening around, not only in our business, but to reach out the smallest customer and give the timely and the speedy finance to the customer. That's what I can bring about. And second thing is like the eKYC or the video KYC by government, as well as CKYC database created by the government, and where like all the banks and NBFCs and financial institutions are the partner. So all this data is readily available, and unlike earlier days, now we are accepting all the digital data, not only the digital KYC, but all the financials, all the bank statement. So that is like the good development has happened. And yes, the use of the artificial intelligence has like not only helped in analyzing the customer per se, the capacity of their borrowing, and it helped the lending institution per se in terms of like product designing, taking the faster decision. So that's what like these new technologies are bringing. Yes, and this industry is growing fast with $350 billion, and a lot of developments are happening. And yes, on the legal front also, like all the documentations are happening by digital signature. By just click of a mail, we are accepting the document, which was not the scenario earlier. We used to take all the like whole almost 60-70 pages of signature and all the pages to be signed. All those things are now changed, and we are accepting even the document based on the mail and by the digital way. So that's a really the great development happened in the digital lending. Yes, and ScoreMe also help us a lot in terms of like taking the faster decisions. In terms of like, a lot of their good products are available, which help us to like take faster decisions and onboard the customer. Yes, and on the even on the legal front, I feel now all the courts are accepting documents digitally, as well as they are doing the virtual, the cases are happening on the video call also. So the hearing are also happening on the video call. So that will help take the faster decisions and even help us in the recovery of the things. And lastly, I want to like say on the payment system, on both customers are like benefited in terms of transferring the fund 24/7. Even on the holidays, they can do their transactions, which has like helped a lot of traders and customers, even who are working on the non-banking days. And yes, the loan size has like come down from the 100 rupees to like crores of rupees are happening digitally. So those are like very good development, which will help India to achieve this 200 billion in terms of the revenue on the digital market. Digital lending, I would say, and we'll definitely go to the AUM of like 350 billion US dollar.
Thank you so much, sir. Thank you for sharing your views. Some important points that I captured from my perspective: the use of e-sign in terms of the documentation and the effort that it reduces, the presence of e-courts and virtual courts. That should bring down the legislation time. And then the very important point that you made on payments, the 24/7 availability of RTGS and UPI, that really enhances the availability of digital services in India. Thank you again for sharing your views, sir. And I'd now like to introduce Mr. Sauparno Bagchi. He's the COO at Balance Hero India. Through his extensive and global experience in banking and financial services, he will lead the operations of True Balance, bringing differentiated customer value and ensuring sustainable growth. Sauparno is an alumnus of ISB Hyderabad. In his career spanning over 2 decades, Sauparno has played various leadership roles and multifunctional roles at reputed companies like Goldman Sachs, Deloitte, and TCS. Saparna, over to you.
Thank you so much. Thank you so much, Praveen. And again, a very good evening to my co-panelists and the audience. Thank you for your time and attention. So I guess like a lot has been covered by my esteemed panelists, things around India Stack, things around the power of AI, where we are moving ahead, account aggregator, all fascinating conversations. Maybe I'll take this opportunity to put it across from the lens of what it means for the future. And what are the areas, maybe from a thought process standpoint, positioning standpoint, and action standpoint, possibly we might have to kind of take a note of. So I come from the fintech industry. That's kind of the bread and butter. So just looking forward, I think there are three things which I'd like to highlight. The point number one is we all talk about India. Praveen, you mentioned about the credit gap. But at the same time, maybe it's also a good time for us to have a bit of a shift in the paradigm from the entire market and what we call as total available market, right? TAM. So at one point in time, maybe the narrative was more about like, hey, you know, what's the TAM? Then do you have the right time and the right team to kind of have the kind of right intervention and add value to customers? Now, I guess the time is right to shift and move ahead in the paradigm and actually double click a little and see, is it about the total available market, or is it like more so as fintech players with the right kind of technological interventions? Is it an opportunity? Is there an opportunity for us to actually focus in the available market, right, which is actually serviceable in the sense, and more so, which is serviceable and obtainable, right? So you have the hierarchy of the TAM, then you have the hierarchy of the SAM, which is the serviceable market. But the key is, especially in lending, whether it's a serviceable and obtainable market, in the sense like a market where you not only lend money, but the ecosystem and the serviceability, your ability to underwrite, your ability to collect, your ability to actually kind of reach out to repeat customers has matured to that degree that you can have a very favorable unit economics, you can have the right kind of price points, and at the same time, you can really, really make a difference to the lives. Here we are talking about in the form of lending is a perfect 2x2 possibly where you can do good and do well, right? We are talking about a segment which is almost in many ways the last mile. We are talking about the MSMEs. We are talking about the small businesses. We are talking about the retail customers who are maybe at the remotest of the pin codes of India. We are talking about maybe most likely in all sense the underserved customers. So our ability to do good and do well is going to be of paramount importance. And therefore, the first area which I want to highlight is about how we can actually expand. The total available market is there, but how we can actually expand the serviceable and obtainable market. What that means is to the right intervention of technology, coming up with the right kind of target market, our ability to originate and reach the customers, and create a serviceable portfolio. So even we know that the supply side, the partners, the banks and NBFCs feel a lot more confident to actually partner with the fintechs and do that. So that's the first point. Second is I think we have spoken enough about AI, ML and the possibilities. But if you look at digital lending, primarily we have taken a unidimensional view. The real opportunity is still out there. When I say unidimensional view, primarily we have focused around, let's say, how do we use alternate data, alternate models, AI, ML, to actually deepen our underwriting systems, which is great. And still there is a lot of room to cover. But if you take a value chain view of the entire business, right, and how you're originating the customers, how you're underwriting the customers, servicing them, and also, let's say, the collections process, right? So if you take the value chain view of it, we are still at the tip of the iceberg when it comes to leveraging frontier technologies like AI, ML, when it comes to leveraging frontier technologies like the blockchain technologies in terms of validation and verification, right? So we have taken like unidimensional deep views when it comes to lending. Possibly it's the underwriting thing. When it comes to wealth tech, possibly it's the recommendation engines. But if you put all together and take an end-to-end view, we are still at the tip of the iceberg when it comes to leveraging technologies like AI and ML. And the last and the third point from my side is, if you see in the fintech space, and one of the esteemed panelists also mentioned about it, we have wealth tech opportunities, insurtech opportunities, fintech as digital lending opportunities. but still the catering is happening at vertical pillars. We are yet to actually come across as universal service players. We are yet to possibly come across as the best of the neobanks in India. We have to crack it. We are yet to crack it. Today, if you look at India, still there is a huge opportunity for us as fintech players to actually do a lot of cross-pollination between a wealth tech solution, insurtech solution, and a digital lending solution. Because at the end of the day, it's the value of the customer, right? It's the value to the customer which we are bringing. Today, still, if a customer is looking for a digital loan, he or she has to go to a digital lending app. If the customer is looking for a wealth tech solution, he or she has to still go to a different app. Yes, there are players. Yes, many of us are actually started the journey in this direction. But just looking at the horizon of next 3 to 5 years, our ability to position as a full service provider in the digital and the fintech space is going to be of paramount importance. So I think these are the three things, and I'll pause there.
Thank you, Saparna, and some very, very important points that you've raised. I think the fact that digital is about doing good and doing well, that's a really, really important takeaway for me. The fact that we still have to truly leverage the power of AI, ML, and blockchain as we proceed ahead on digital side. And I think the last very important point that you were making was the siloed versus a more universal approach, rather than it being about individual areas such as wealth management, insurance, or lending, bringing it all together into one universal service, So very, very important points raised by you. And thank you for sharing your views today. Next up, I'd like to invite Mr. Uday Jadhav. He's head credit and risk and digitization at ALD Automotive India. He has over 16 years of industry experience in BFSI with business development, client servicing, policy framework, and portfolio analysis. His prior assignments have been with HSBC, HDFC, Citi, and ICICI Bank. Uday, over to you.
Thank you, Praveen, for giving me this opportunity to be part of this webinar and sharing this platform with such of colleagues. So all of my speakers before me have touched some of the other aspects of the digital lending. I'll be touching more on the AI, ML, or neobank, which is a next generation into lending process. We have come to a situation like for 10 years or 20 years back when there was a loan approved to a consumer or it is being disbursed. He used to actually come to a branch and distribute sweets to his relatives and colleagues, to a situation wherein the banks or lenders are actually calling you day in and out or contact you some other way to have that money. The challenge here is like how we can reduce their efforts and make it more and more efficient, less time consuming. That's the challenge remains with the lending process. We have come from days to hours, and now people are looking out for it within seconds. They want money in their accounts. So obviously AI or ML play or the blockchain plays a lot of differentiating factor into this. You have something called a chatbot, which is helping you to address your service related queries. Now you do not have to go to banks or any other to get as simple. Now in the month of February, everybody needs interest certificates. So earlier you used to go to bank, get those statements or something. Now it's just one click away. You can get it right there, right itself. Also, it helps you, AI will help you to analyze your current profile of the customers you are serving, your portfolio, how better you can serve them, rather than that customer approaching a lender or a bank for any particular service. Proactively, the bank or a lender can give that particular option to him right there on his mobile app. You have these approvals for loans or any kind of cards or any kind of facility. This is basically on AI and ML based. They analyze your transactions, your average banking, the way you spend. They have access to put your credit scores on a consent base. Now you also have so many platforms wherein you can actually go and compare a lot of options available. For example, you go to Policy Bazaar, you can even compare your loans with different lenders. You can compare your insurance policies, something similar to that. So this is purely based on the convenience. Coming to the new age banking, that's neo banks. That is one of the future aspects which will be hitting up major stuff going forward in the digital lending. Now, what are neo banks? These are basically new age banks without any physical location present, entirely online. You see a lot of branches in and around for established players, but there will be these new banks wherein they are only on your mobile phone. There's no as such a brick or mortar branch network available wherein you can walk in and get. But at the same time, they can provide you all sort of services like digital, mobile first financial solutions for payments, money transfers, lending, and more to that. They also allow customers to have deposits and withdraw money and products like debit cards and so on and so on. There are certain challenges to this, although this particular neo-banking segment is projected to grow something around 70 billion USD by 2023 at a CAGR of around 17% here and there. But there are still certain challenges to it that this still doesn't come under the RBI as they tie up with the regulated banks to offer these services to the customers. And the major challenges include lack of revenue resources. There are no proper regulation for the interchange. Also, customers are not that familiar with this mode of things. And you can say the belief in this particular segment of banking, as there's no face-to-face customer support or any kind of default scenario, then how it will be tackled. So that fear factor also plays a major role. Although we are making a lot of progress into digital banking, the factors that affects or that bothers me is that still we are catering to that particular segment, which is digital savvy, which is technically savvy. And maybe these kind of platforms are generally catered to a very clean profile kind of customers who are majorly salaried at a certain income bracket with a certain credit score level. And then because the AI and ML are based on something like that. So you are lending to a very secure kind of customer portfolio and you are not taking a risk. So banking is basically that a credit needs to be offered somebody who is in need. So maybe an SME, MSME kind of segment or a lower strata of the ecosystem that needs to be catered. As you see, post-COVID, there's a huge urgency in the cash circulation. Now, why this has happened? This has basically happened because of the inflation, and due to several policy factors, there have been certain instances that this particular segment they do not fall into the regulatory norms. They are cutting away of the GST factors. They want to be part of the pay less taxes, still deal into the cash circulation flag. Although there's a lot of increase in the digital payment system. You go to any hawker, you pay through Paytm or similar kind of apps, right? But still there's this kind of, this is the segment, I guess, as we develop our technology, we need to think more on these aspects, how we can cater to this kind of segment and bring them into the mainstream and make them part of the ecosystem and overall lending and the banking system or the financial process system. Thank you.
Thank you, Mr. Uday, for sharing your views. Three themes that are captured from your perspective: the significance of technology and the use of AI, ML, the emergence of neo-banking and the kind of growth that's projected for neo-banking, and of course, once again, the common theme that's been emerging through this panel discussion, the fact that digital banking and digitization is still accessible to the digital savvy folks, and really how to reach to that bottom 90%. That still remains a big challenge. I'm conscious that we are close to the end of the hour. Any closing thoughts from anyone? Happy to hear any closing perspectives. KP, anything from your perspective?
No. I mean, they've all spoken very cogently and nicely about everything. The only thing I would say is, I don't know if that would be much appreciated. Most of us, let's say most market tries to serve the well-served, because that's where the margins are and that's where immediate, what we traditionally call low-hanging fruit is there. the tougher segments to address are the unserved, underserved. They remained unserved, underserved because it is also tough to serve them, right? There is no digital footprint. There is, I mean, it's expensive, small ticket loans and all that. All that is changing now, but changing slowly. Digital definitely makes, like one of our esteemed panelists said, small ticket loans viable. But I'm saying with all of that we know, so I don't want to repeat that. The only thing, I'm not saying it's missing, the only thing that would really help accelerate this is a passion to serve. I think we should not think that, that's not a CSR activity. That should be made our main business. CSR won't go that far. You want to serve 60, 70 crore people, CSR won't take us there. So that's the only thing. If you have the passion, if you think that's part of my duty to do this, and we do that, I'll give one example. We charge per data packet delivered, just to give an example. We charge differently for the well-served segments. We charge very low for the microfinance segments. And we do it deliberately. There's no law against it or for it. We're doing it on our own. We think that's the right thing to do. So therefore, I think all of you are in that digital world. So I'm sure all of you share that passion. If you have the passion, I think then bringing them into the economic activity would take us to the 5 trillion economy goal, which the first speaker himself said. Thank you very much.
Perfect. Thank you, sir. Dhruv, any views from your perspective? Any closing thoughts?
Just to add to what KP has been saying, on the micro SME side, there is a lot of work which is happening. Just to add to that, from bringing them in a formal ecosystem of lending. The first journey has been more of a non-digital level. You would have seen in last couple of years, a lot of NBFCs have started focusing towards micro lending. That's one thing which has happened. Second thing has been is that there has been a conscious effort by a lot of I would say fintechs. Just for a namesake is Paytm is one of the key leaders in the market in today's time. Their whole lending ecosystem, which drives revenue and creating and all, is all micro merchants to whom they are funding across. The key in this is that how the gap between so there are 3 aspects of this pillar. One is how we accelerate the process of bringing informal more to formal. And as you rightly said, that there is no formal data to assess them and all. Alternate data models has to get created so that the offline model, which is currently working, it can get merged with the the digital level and all. And this is where, as Uday rightly mentioned, that AI would play a very, very critical role as we move forward. Currently, over the years, a lot has been talked about AI. But AI to a level, for example, and for a reference sake, if I may say, the way it happens when you go and book your airline ticket, if you go twice, your price changes. So that's a difference which is there. Or you go to something like you would have used WeChat in China, or you would have used Alipay, their ecosystem and all. The way they have created as AI and ML, that's something is the next big thing which has to happen to bring everybody in the ecosystem. And that's going to be a core, I would say, the next half a decade to be looked for.
Perfect. I can see a query from the audience. What is the maximum loan size available via digital means? Anyone who wants to take that question? So I think the intuitive question there is, to what extent can we go via digital lending,
So in SME lending, it goes up to 50 lakhs also.
Perfect.
In unsecured process as such.
Perfect. Soparno, any views from any closing thoughts from your side?
Sure. I think I'll highlight one thing is I think as a creator economy in the digital space, we are doing awesomely well in the sense like technology is really, really at the frontier at driving it. But we will never be able to maximize the potential till the time every ecosystem player gets into a collaborative mode, which means the fintechs, the banks, the NBFCs, obviously the regulators, other service providers. So the key as a closing thought would be, as a creator economy, we are doing very well, but we need to possibly have a room for being a collaborative economy and get the maximum out of it. So that will be my closing thought.
Perfect. Vineet? Vineet,
You're
please
on
unmute.
mute.
Please unmute yourself.
Sorry. So I will say that here lots of things on the technology side, from the consolidation side, lots from that joint venture between the banking and the technology and the fintech has to be come up with the more innovative solutions to capture the market. And we will in a near future will see more and more new things, new technology, new products that will actually serve the purpose and in the country and the SMEs.
Perfect. Mr. Sharath?
Yeah, one more point I just want to add is digitization of properties or digitization of ownership of properties, what government is working on, that is helping in secure lending a lot. Like the Tamil Nadu government gives all the ECs online, and we can see whether there is any charge of any borrower or any lender. So I think yes, a lot of development need to be done on that aspect because some of the data still is under process, and yeah, that's all.
Thank you, sir. Uday, any closing thoughts from your perspective?
Yeah, I just would like to highlight something new which is going to happen in digital lending. So apart from your banks and NBFCs and any financial, the next one would be P2P lending. It's peer-to-peer. You're part of one particular app, and then that particular app gives you a better interest than the market is offering you by any NBFC or bank. At the same time, you can lend to a peer. Now the challenge is there. That's the technology which is available, which gives you easy money than the market. But at the same time, how secure you are and how that particular peer is being safeguarded by his money. That's the next thing which is going to happen into digital lending, peer-to-peer lending.
Perfect. Thank you, Uday. I know I have learned a lot through this session, and I'm sure as has the audience today. I think the phrase that I will take away from this session is the passion to serve. So as long as I think we have that passion to serve as key players in the digital lending industry, I think India will lead the way globally via digital, via the emerging themes of account aggregator, the own DC, and the neo banking model. So I just want to thank all the participants and panelists again for joining this very useful session. I appreciate your joining and taking time out today. And until next time, it's bye for now. Thank you. Thanks so much. Bye-bye. Bye-bye.
Thank you very much.
Thank you. Thanks everyone.
Thank you.
Thank you.
Thank you so much.